What's the difference between a loan and a line of credit? That's easy. A loan is a predetermined amount of money that you are going to receive at one point in time with usually a set interest rate and monthly payments based on the amount of the loan and the term of the loan. It's set, it's fixed. If you're taking a loan for $100,000, you are going to get the $100,000 minus whatever the origination fee is, if there is an origination fee. A line of credit is a lot more flexible. A line of credit, you get approved for a certain amount. Let's just say that amount is $200,000. That line of credit is opened as soon as you draw from it. What drawing from that line of credit means is you're pulling money off the line and into your account. So if you're approved for $200,000 and you wanted to take $50,000, you take $50,000 and you're only paying interest on the money that you take, and you only pay interest as long as that money is out. So as soon as you would pay that $50,000 off, there'd be no more interest. So if you paid it off early, right, all the remaining interest would be waived. When you draw on that, you are drawing, and that payment is calculated based on the length of time that the line of credit is open for. So some lines of credit are 6 months, some are 12 months, some are 18 months, some are 2 years. And it's based on the amount that you draw. One of the main differences between a line of credit and a loan is if you have a line of credit for $200,000 and you decide that you want to only take $50,000 to start, at any point you should be able to tap into that other $150,000 that's available to you, right? So a line of credit is a lot more flexible than a loan versus a loan for $200,000. If you take a loan for $200,000, you're taking that full $200,000 up front. That payment is based on that, and it doesn't change. And once it's paid off, you can then go apply for another loan. Loans are typically used for very large expenses, where lines of credit are used for shorter term expenses. What I mean by that is simple. That line of credit should be and could be used for inventory, marketing, adding employees, supplies, because what happens with a line of credit is you draw from it and you pay it back based on the draw. And if you ever need more money, you could tap into it. So a line of credit gives you the flexibility that you need to grow your business, or a line of credit can be viewed as a safety net. What do I mean by that? We all know that over the course of time, businesses have great months and businesses have months that may be a little bit more challenging. And what I tell everyone is, if you have a business that has ups and downs and you have a line of credit open, well, if you're having a tough month, you can always access that line of credit, draw from it, and that should cover any gaps or any shortfalls the business is currently having. Lines of credit are either used for growth or for emergencies, and it's very important that every business, I feel, has a line of credit for those reasons, right? You don't want to take a long-term loan, like a 5-year loan, to pay for marketing, to pay for supplies or inventory, because once you do that marketing or use those supplies or sell that inventory, you need to go and rebuy that. With a line of credit, you can draw on it, pay it back quick, draw on it again. So it's really great for short-term uses that will allow the business to scale, versus a loan that is going to be stretched out usually over a longer period of time, because the loan is more, I would say, finite, whereas a line of credit, you do have a lot of flexibility. A lot of questions I'm always asked about lines of credit, like how do you get a line of credit? Well, one, you could visit us at Integrated Business Financing. We can set you up with them. We have access to the best lines of credit for businesses out there, and it's a really quick and easy process. It really only takes anywhere between 24 to 72 hours to get approved, and you can draw on it right away to activate it. And typically all you need is 6 months of business bank statements, driver's license, a voided check, an application, and your most recent business tax return. Whereas a loan's a little bit more intensive. When you're applying for a loan, it could be 12 months of banks, an application, driver's license, voided check, financials, and at least 1, if not 2 years of tax returns, and they could ask for your personal returns as well. So if you don't have a line of credit and you are a business that has been in business for at least a year, you should work on getting one right away. And typically what you're gonna need is 650 credit and at least $30,000 going into a business bank account each and every month. But those are really the main differences between a line of credit and a loan. And I suggest, again, I can't stress enough, if you are a business in 2021 or anytime, you should have a line of credit, as it will help you grow and it will give you a safety net if something happens to your business. We set up lines of credit. We probably set them up every single day. So it's a very, very common thing for a business to have, and more often than not, if you don't have one, you need to set one up. And the best time to set up a line of credit is, believe it or not, when you don't need it. And the reason I say that is what underwriters will look at when they're looking for how qualified you are, how much they're going to approve you for a line of credit. That shows up when you don't need it. That's really when they want to approve a line of credit. When you need it, typically certain things could have happened that will impact your application. Like your credit could have taken a hit, could have had a couple negative days in the bank account. Those things will take a toll and will actually hurt your chances of getting a line of credit. So if you don't have a line of credit and you haven't really thought about getting one, and you say, hey, I don't need it, that's the absolute best time to apply, because your credit will be high, you'll have a good amount of cash in a bank, and that's when you set that up. And any interest that you would pay on a line of credit is deductible on your tax return. If you need anything or you have questions, go to integratedbusinessfinancing.com and I'll be happy to answer all your questions.